Welcome everyone. Thank you for joining us for today's webinar. My name is Laura Wilson. I'm the Project Officer for the Risk Management, Economic Sustainability, and Actuarial Science Development in Indonesia project, also known as READY. This webinar is co-sponsored by the READY project activity and the Canadian Association of International Development Professionals, also known as CIDAP. The University of Waterloo is the executing agency for READY, which is funded primarily by the Government of Canada through Global Affairs Canada. CIDAP is a non-profit association that represents Canadian international development professionals in Canada and elsewhere in the world. During this webinar, an expert panel drawn from our Canadian international development community, the International Actuarial Association, and the Canadian Institute of Actuaries will provide insights on the use of microinsurance in international development. Some of the points that will be covered are: what is microinsurance? What is holding back widespread use of microinsurance programs? Are microinsurance programs equitable? What models could be used or adapted to address challenges? Just a little housekeeping before we get started. If you have any questions during the presentation, please type them into your chat box in your GoToWebinar control panel. I will try to include as many as possible during the discussions, and we will also have time at the end. Before we begin, I would like to introduce our speakers. First, I have Nigel Bowman, who is a product and distribution executive at Inclusivity Solutions, a South African company working with mobile operators, insurance companies, and other distribution partners to deliver sustainable digital insurance solutions that meet the needs of emerging consumers. Nigel also currently chairs the International Actuarial Association's Microinsurance Working Group. Our next speaker is Denis Garand. He has over 36 years of insurance experience. Since 2001, Denis has been an independent consultant focusing on the Canadian group insurance industry, international microinsurance programs, health insurance, and international regulatory systems. Denis is the preeminent expert on disability insurance in Canada, having developed LTD rates for many insurers, conducted valuations of disability plans, and is the co-author of the CIA 2004 to 2008 LTD termination study. Denis has worked in over 30 countries in health insurance, regulations, and microinsurance. And our last speaker is Dana Peebles. Dana has 36 years in international development experience. She is the founder and director of Cartini International, an award-winning consulting firm that specializes in gender equality services. Her gender equality work has focused on institutional gender mainstreaming, social change management, and gender issues in a private sector context. She has worked in close to 50 developing countries in Middle East, Africa, Eastern Europe, Southeast and Central Asia, and Latin America. Denis, we'll start with you to look at microinsurance, the market, and various microinsurance products. Welcome.
Thank you, Laura. Just imagine a fire raging through your community and you have barely time to escape with any of your belongings. Is this Fort McMurtry, Alberta, or is this a slum in Bangladesh? The issue for people in Canada is that most of them had insurance, so most of their goods were replaced. But for the people in Bangladesh, there was nothing, no insurance available to them, and they lost absolutely everything. So this is why microinsurance is important. If we go to the first slide, the microinsurance market, or the potential people that we can reach, we know from the World Bank there's 3 billion people that earn less than $2 a day and 1.3 billion that earn less than $1 a day. 72% of the world's population has income below $3,000 a year. So the vast majority of the world has no access to insurance. And that's why we're talking about microinsurance, is to try to create access to insurance. If we go to the next slide, GIZ has done a study of how the Sustainable Development Goals are impacted by microinsurance. And if you can see in the slide, the bold items, there's 6 of them that are really impacted, that microinsurance can play a primary role in helping to end poverty, into helping with gender equality, in the gains on health insurance, and in terms of infrastructure and other issues. And then in the 5 other ones that are sort of red circled or red squared, they have a secondary impact. So microinsurance has a really important impact for the Sustainable Development Goals that the world is looking at. If we go to the next slide. In the World Health Organization has a report out saying that 100 million people become poor every year due to lack of health insurance. And we know at least half the world's population still do not have full coverage for essential health care services. This is a big issue that happens even in the United States. In the 100 million is included some people from the United States that don't have health insurance. So it has a major impact not having health insurance. And then as a former person having served in the Canadian Armed Forces, I look at how much we're spending on military expenditures, and I think we don't really have the right priorities. A fraction of that amount of money aimed towards development would have a huge positive impact and reduce potential conflicts. So if we go to the next slide, what can microinsurance do? So the question is it useful for every situation? So the poor people, when we go in many countries, we do surveys and look at what are the risks that people face. Usually the #1 issue we survey is health issues, if the country doesn't have a good health insurance system. The next issues are death in the family, and for people in the agricultural area, it is crop failures. And most countries have no financial protection from these issues. So if you look at the bottom of that slide, you can see there's a graph there. Somebody's maybe living in poverty, and they're able to work themselves out of poverty, and then all of a sudden a disaster strikes, and then they could fall back into poverty again. So microinsurance can help stop them from going back into that situation. I once read a study of Grameen's microfinance institution. Over a 10-year period, 60% of the people came out of poverty. 40% did not. And of the 40%, if you break that down into 25 and 15, 25% it was due to a health problem in the family, and 15% was due to a death in the family. And I went and spoke with Muhammad Yunus as a consultant, and if you read Bankers of the Poor, he doesn't like consultants, so he was very testy at first. But then he understood what we were trying to do with microinsurance and said in that situation, if they had had insurance, they could have helped a lot more people from not returning back to poverty. So the insurance industry is trying to help in these issues, but the insurance industry has actually been very poor at doing this. I've been working at this since the year 2000, and the first reaction in insurance companies is they don't want to really do anything in this area. So there's been a lot of work by different organizations, and Nigel will speak later about the work he's done. There's a lot more people involved in trying to get people to understand how to reach this area. But the biggest thing you need is you need to aggregate resources and work together. So if we go to the next slide, I have a picture. Sorry, I wanted to show the picture there Yeah, so this is an aggregation. This is, Dana will be talking about SEVA in India, and this is a meeting of SEVA that I went to, and this is what you call an aggregation of people to work together to pool their risk. So if we go to the next slide. Microinsurance can't do everything. It's only one tool in the toolbox, and by itself it won't alleviate poverty. So it has to work with other instruments in reducing poverty. So there's a lot of other instruments that the people listening to this forum would be well aware of. Education, health, and these other issues are all very important. If we can go to the next slide. How does microinsurance work? So you can see in this slide, there is an arrow pointing down saying the degree of difficulty. So if you go down that list, it becomes much more difficult from an insurance perspective to do. And if you look at the arrow on the right side, the degree of success, you can see as you go up that scale, there's where you see a lot of success. So Credit Life is the first product that has been very successful all over the world. I've rarely seen anybody fail at doing Credit Life. And Credit Life is for a microfinance loan. If somebody has a loan, usually when there's a death, then they forgive the loan. So the next step to Credit Life that people have been moving on to since the microinsurance community has been advocating is to say, not just forgive the loan with the death of the debtor, but let's give something to the family. So that's also included in Credit Life, and that is also very successful. Then there's term life and personal accidents. That's where it could be a voluntary type product. In the right setting, it could work very well. And then there's savings insurance, property insurance, endowment life. And then when you get into health insurance, it becomes much more complex. There are very few successful unsubsidized health insurance programs due to all the complexities that every country faces. And I always use for health insurance, I use the example of the United States as being the worst health system in the world and Sri Lanka as being one of the better systems in the world. The United States spends 18% of GDP, Sri Lanka spends 3.9% of GDP. And if you look at the three key health outcomes of life expectancy, maternal mortality, and infant mortality, Sri Lanka is near the United States for the amount that they spend. Agricultural insurance has been very important, especially with the climate change that we're seeing, and it's starting to develop. It seems to me that there's a focus by the donors that has shifted in the last 5 years, mainly towards agricultural insurance and trying to find ways to protect people. So health insurance is one of the principal areas I work in, and it's a principal reason for loan defaults in MFIs when you start looking at the information. If you have health insurance, you can help maintain somebody's situation. It doesn't reduce poverty per se, but creating access to insurance, health insurance, really helps overall productivity. But we do see the same cycle in the United States, India, Cambodia, any of these countries of people that don't have health insurance. So the situation with somebody that doesn't have health insurance, you feel sick, you start trying to deal with it by yourself, you don't get the right treatment, you don't get the right consultation, things get worse and worse, and then you finally start spending some money. You spend it probably incorrectly in trying to find the wrong resource to help you, and things get really bad that you finally end up in the medical system and you have to sell all your life savings and fall into poverty. So let's go to the next slide. In Bangladesh, we worked with a really interesting product with an endowment insurance. So a traditional endowment insurance for people that are not versed in insurance products is that you pay money, a little bit of money every year, and at the end of 20 years, you get a lump sum. So if you want $20,000 at the end of the year, you pay over 20 years and you get $20,000 at the end of the year. The traditional insurance methodology doesn't work for people in low income situations. So Inafi in Bangladesh designed a product, and I worked with them, and they designed a 3-year, a 5-year, and a 1-year endowment program, which is unheard of in the regular insurance world. There's also, in traditional insurance, there's penalties. If you stop paying in your endowment insurance, you lose most of the value. And in Inafi, they didn't lose most of the value. Everybody, in the first year, if you stop participating, you did lose some value, but it was very clear when we went and talked to the women through interpreters, everybody understood that very clearly. So the women that we talked to really liked this endowment insurance because they said, I'm saving for myself with this. So, and there's always problems with men around the world. If there's cash in the house, it's gone. So the women saw this as a safe way of saving money and getting something. So one woman in particular we talked to, she had both endowment and term insurance, and she says, why did you split it this way? She says, the endowment insurance is for me. I'm going to get something at the end of 3 years, and the term insurance is to protect my family. So she had a very clear understanding, and that was very well done by Inafi in Bangladesh. In terms of health systems, Grameen, Kalyan, and BRAC have both had some micro health insurance programs and health systems that are extremely efficient. They ended up meeting 99% of the community's needs, and this now is probably 10 years old, my data on them, but they were insuring a family of 4 for about $10 US a year and covering 99% of their needs. And they were making sure the health system works efficiently, which most health systems around the world do not work efficiently, including Canada. If we go to the next slide, this is a graph of credit life in the Philippines. Philippines is a country in the world that has the greatest participation in microinsurance. 20% of the population is covered in microinsurance. So when Typhoon Haiyan came through, which was devastating, it was a Category 5 typhoon, and a lot of people were affected. Over 200,000 people got payments from microinsurance program. That's the first time in a major calamity like that with low-income people actually had insurance to cover some of their needs. But this example is about credit life in the Philippines, showing the progress over years. So in the year 2008, the premium written was about 19.6 million US dollars, and the companies were making a profit of $11 million. So I would say that's excessive profit in that situation. Because more and more people started participating, the competition grew. So if you look at the year 2012, there's 55 million in premium written, and the profit is 14.4 million. The profit as a percentage has actually dropped quite a bit, but they're still making more money, but they've reached more people. So this is the argument we try to use with insurance companies, and they're very hesitant in every market to reach out to and grow their market. We say, you expand the market, you could actually make more money, and you could also give more benefits back. If you give more benefits back, you're going to get more people participating. It's still not at the level where I would think it needs to be. For example, in Canada, when I worked in the credit life market, you know, the loss ratio would be like 90%, and the companies would still make money. So you can grow quite a ways with that. So, okay, we'll go to the next slide. So, the mountain in the distance is K2, the tallest mountain you can see in that picture. This is in where the Aga Khan has a program in the Gilgit area of Pakistan, and we worked on a health insurance program there. You can see the conditions are very rough just by this picture. It's a very rough terrain. So you can work in microinsurance in a lot of different settings. Okay, we'll go to the next slide. Anybody getting involved in microinsurance should be looking at key performance indicators. So this is a publication done by the Microinsurance Network with the help of ADA, BRS in Belgium, ADA in Luxembourg, and GIZ in Germany. It was, if you're going to get involved in microinsurance and if you're involved as a donor, you should be measuring these key indicators. We set this up when a lot of microinsurance organizations were not regulated. They were telling their governments in their countries, we're just going ahead and doing microinsurance. We don't care what you say. Because there's a lot of regulations that are blocking microinsurance. So we said, if you're going to do that, make sure you do it soundly, because a failure affects future generations. If there's a failure, nobody's going to want to participate. So it's important to do it right. So these key indicators look at the key things. The first one is a net income ratio, where you're looking at the company or the organization that's putting this on has to actually make money. And this follows insurance theory. If you don't make a little bit of money, you're going to be destined to failure eventually. So it's important to make some money. The issue is how much money you make. And we're saying you shouldn't make more than 10% of premium. The next issue is incurred claims ratio. How much are you paying back to your clients? It should be 65%. Sometimes in health insurance, because of the complexities, there's more administration. It can be lower, but it should be 80% or more. And in some situations, I have seen microinsurance programs at 90% and they're still operating efficiently and they're making money. The other issue is operating expenses, making sure your operating expenses are very efficient. And in this case, I've seen a microinsurance program running at about 5% operating expenses. So they're a very efficient organization. If you're having a program that you need renewals, you have to look at making sure a lot of people are renewing. If they're not renewing, that means the program is not meeting their needs or you haven't communicated it very well. The coverage target should be over 10%. This is where you can get rid of a lot of underwriting rules, and this is what scares insurers when you get rid of all the rules that they have. But if you reach a mass of people, like the picture we had of Sewa, if you reach a good number of people, then it can work. If we go to the next page, the growth ratio looks at the number of people that are taking up your program. So if you're successful in an area and people are seeing it's meeting its needs, we do see it grow over time. One of the measures that we have in this is how fast you pay claims. When I first got involved in microinsurance with Vimo Sewa, it was taking 6 months to pay a claim. And now they're able to pay within a day. So understanding where you are, and the people that are struck with these issues need the money today. You have to be on their doorstep as fast as a moneylender can be. So the microinsurance industry around the world has that issue. The claims rejection ratio measures how many people you're rejecting. So if you're rejecting a lot of people, you haven't explained your insurance very well. But the other hand, it won't be zero because people try fraud everywhere in the world. And if you don't stop fraud, the program is going to fail. And people will know if you pay fraudulent claims, the words get out in the community, so they lose confidence in it. So there's a balance in that one. And the last two are measured, trying to measure liquidity, the ability to pay claims quickly. So there is a program in India that I saw that they didn't have enough liquidity, the solvency, and they stopped paying claims for a while. So, and they're covering heart attacks or people that needed heart surgery. So I thought that's pretty bad. If you need a heart surgery, you can't wait 6 months. You have to pay it. So those are more, these are sort of the issues that all regulators should look at, and we sort of compacted them into 10 indicators. So we'll go to the next slide. So these key performance indicators really focus the key issues, what need action. In every country, in every situation that I've gone in, I use these key performance indicators, and once we can measure them, in half an hour we know where the issues are and what needs to be worked on. The other value is benchmarking yourself. So if you're a company that has a 40% expense ratio and you could see somebody doing it for 5%, you start to have to ask your questions of how you can change things. And over time, organizations that actually use key performance indicators, and I would say that's rare, even in the developed market in Canada, you do see really dramatic changes over a 10-year period of people that do this. So, and the idea with microinsurance is you have to work with mass insurance. You try to reach a lot of people, and you can improve your profitability for people that are really interested in that issue. So the final slide I have is just the key to microinsurance success, and Nigel will talk about more, in my mind, is a distribution system. Do you have a trusted distribution system? And in Bangladesh, BRAC is a trusted distribution system. When I go back to Bangladesh now, I see BRAC chicken, BRAC solar panel. So it's become a brand name because they've been so effective. People know that when BRAC is behind it, they're getting something of quality. If you're doing health insurance, you have to do affordable quality care, and efficient management is the only way you're going to make microinsurance work. And Nigel will talk maybe a little bit more, but for actuaries getting involved in this, it's a whole different picture in how you deal with this. And a lot of actuaries are not equipped to do this. A lot of actuaries I've seen do this totally wrong. So the final picture I have is the next slide, is a mutual health insurance in Rwanda. This was a village of 30,000 people on the top of a mountain, and they were the first successful health mutual I saw. They were running everything right. They're operating on $5 premium per person per year, and they were sustainable. And the final slide is just for your information, where you can get more information. And the good book, Reading Banker to the Poor, is a really good story, especially the section on consultants.
Thank you so much, Denise. That was very informative, and thank you for talking about the products and the microinsurance market. Right now, I'm just going to see if there's any questions for Denise. And I don't think that we have any right now, but again, we do have a Q&A period at the very end of the webinar. Now we're going to have Dana Peebles speak on equity challenges in microinsurance.
Thank you. Okay, the main equity challenge I'm going to be talking about today is around gender equality. So the focus will be predominantly on women and girls, but we also understand gender issues affect men and boys. But in this for this particular presentation, the focus is on women and girls. So I wanted to first give you the context, and that is that if you look at what Denis was saying about what percentage of the world is not covered, it's a lot, particularly amongst the poor. So you have 97% of the world's poor in the 100 poorest countries in the world do not have microinsurance. So that's a lot. That means about roughly 2 billion people. And of that group, you have to understand, and this is why my focus is on this, women and girls make up 70% of the world's poor. So that's a UN statistic. And I wanted to give you also just a little bit of an idea of why that is the case. One is for a variety of cultural and physiological reasons related to childbirth and history, a lot of different things. Women generally own a lot less property than men. They have lower incomes and fewer assets. That means that they have a lot less resources to manage risk. When there's an emergency of any kind affecting the family or their business, it means they can't draw upon the same level of savings or other types of assets or resources to cover those things if they do not have microinsurance. So instead, they resort to different types of strategies to cover their risks. Men in the same situation also do this, but they've got often a wider or broader base to do it with. But poor men are also very, very poor. But what happens with the women is they sell their assets. They pull their children from school, either to help out at home or to reduce the cost of their school fees. They also use their business profits to cover short-term emergencies. And this is as opposed to using that money to invest in long-term growth of their particular company or even sustainability of their business. All of these are quite effective in the short term. In other words, they cover the emergency, but much as Denis was saying, it means they fall further into poverty, and it's often very, very difficult to get out again. The other kind of gender-specific risks that women have is that they're far more likely than men to be working in the informal sector. What does that mean? Basically, it means they're not covered by formal government insurance systems or social protection systems. They have less legal protection, and they're also much more subject to harassment by police because their businesses are not registered, so they might be harassed for not paying taxes. And they tend to be more vulnerable to theft of their assets. And you also tend not to earn as much money in the informal sector. So again, it's more difficult to sustain a loss when there's an emergency or any kind of risk situation that becomes a real situation as opposed to just a risk. So all of those things, again, reinforce that cycle where women tend to have lower incomes, fewer assets. It's a cycle, or I guess they call it a vicious cycle. If we look on the more social side of things, women are also far more vulnerable to gender-based violence. That's both inside the home and in public. So you say, why in public is it such a big deal? Because that affects whether you can go to work or not. It affects how well you can run your business. Within the home, it affects productivity, days lost because of injury, psychological damage. And for me, the studies that the World Bank has done have shown that the actual cost to the GDP of any one country can range from 1.2%, this is in Brazil, to 2% in Chile. And I think in Britain they said that it was as much as 10% for people who were women who were affected by violence. Sometimes, in some countries it's more. It affects all classes. But if you're poor, it's much more difficult to escape from an abusive situation. And all of that, it has a link in terms of microinsurance, in terms of health. And I think a little known factor is also that the perpetrators of gender-based violence are also, their productivity goes down. I don't know exactly what the link is, but that was another World Bank study. So it's we could go on, and that's another whole subject for another webinar, but not for this project. Anyway, so other kinds of gender-based risks that women face in particular, pregnancy and childbirth. They create very, very specific health risks for women. You've got very high maternal mortality rates in some countries. And to carry on Denis' theme about the US, we seem to be US bashing today, but Cuba has a lower maternal mortality rate than the US. And that's got to do with people's access to care and government health insurance and protection. The other thing is women are far more vulnerable to some diseases, such as HIV/AIDS. Again, this is a sociological factor as well as a poverty factor. There are clearly some diseases which affect men more, and how men and women respond to treatment regimes is very much determined by gender issues and values. Men feel a lot of pressure to go out and be a breadwinner, so they might not comply to the regime, the treatment regime, because they can't afford to take time off work. Women might, for example, if you've got tuberculosis, women might be given extra food rations to help build up their strength, and they give it to their children. So, but all of these things have implications for your health insurance, and particularly from a microinsurance perspective. The other big risk, and this is a global one, it's got nothing to do with gender values, it's a biological issue. Women live longer than men in most countries. That gap is starting to become less in developed countries, but not so much in developing countries. So what you've got, if you're already poor and your spouse dies, you lose that income, you're poor, you're even more poor for a lot longer. So again, the life insurance, micro-insurance product is incredibly important for that group. The other thing is that women also face some risks in some countries, some cultures, depends upon the legal system and what the traditional practices are, that their property may be appropriated by male relatives. Of course, my experience has been that people fight over estates no matter what country you're in, but if that's what you're relying on for your living, it's incredibly important. The final gender-specific risk I wanted to look at was the whole issue of climate change and natural disasters. Obviously, that affects both men and women. And climate change has exacerbated natural disasters and crop losses for both. However, there are a lot of studies that show that women, boys, and girls are 14 times more likely than men to die during a disaster. If we take the 2004 tsunami in Asia, the large majority of those who died were women and children. There were a variety of reasons. I think in Sri Lanka, women traditionally didn't learn how to swim, and women and children were less strong than men, and so it was harder literally to hang on to a tree if a wave was pulling you. So there were a number of issues. To keep a sort of more balanced perspective, in some types of disasters in some regions, men are more affected. For example, in Central America, in hurricanes, men tend to be more affected because they go out and they try and fulfill a protective function. They try to look out for their families, for neighbors, etc. In the Caribbean, it's the women who look after the elderly and who are the last to evacuate. So it will change from community to community. But what it means is you've got gender-based risks in natural disasters that need to be factored into any kind of microinsurance. It's like any kind of insurance at all. The other thing that sort of related to this, which I found very interesting, because I find all this stuff very interesting. I'm a gender nerd, right? 36 years and still kind of go, oh yeah. Just anyway, in a study of 141 countries, they found that gender differences in death rates in natural disasters were directly linked to women's economic and social rights. In other words, the more equality there was, the less difference there was in the death rates. So that sociological factor is incredibly important. And it happens everywhere. So don't think there isn't gender discrimination in Canada, because there is. Particularly when you get into Aboriginal communities, it gets even more obvious. Okay. So clearly there is a huge potential market. And there's a definite clear need for very gender-focused or microinsurance products that take some of women's and girls' challenges into account. And there's also research that shows that women have quite a few characteristics that make them very attractive to formal insurers. They pay back their money. They pay their premiums. They're less mobile than men. That's, again, for sociological reasons. So they're a more stable client. You can find them. You know where they live. Now, I worked in Cambodia for a while, and I was working with CLEDA, which was a microfinance institution, which has now become a national people's bank. And they had a system where they had microloans, and people in the community, people would come and pay their loans every month. But they also had people on motorcycles who would go around and collect the premiums because they knew where people lived. They had a personal relationship with them. So people who were not moving around are easier to find. They're also more likely to be reliable in making regular payments. There's a lot of reasons for that, which I will not go into at the moment, but the World Bank has done a study on 350 microinsurance institutions in 70 countries, and they confirmed that overall pattern of women's reliability. If you look at it just from a, excuse me, microinsurance loan perspective, microfinance perspective, as opposed to just insurance, women have repayment rates well over 90% globally. And that this is actually a significantly higher rate than men. Men are more likely to default for a variety of reasons. Would it be possible to get a bit of water? Thank you. And the, thank you. Anyway, and so I liked this quote that the World Bank, from that World Bank study. Having more women clients is associated with lower portfolio at risk, lower write-offs, and lower credit loss provisions, other things being equal, of course. This is not to say you should not provide microinsurance for men. All we're saying is that women are good prospects, and it's a good reason to really think about, you have a women's market, you've got a men's market. There's a lot of different factors you need to take into account when you're developing a microinsurance product. I'm just making the case for one set. Okay. So if you are developing a microinsurance product for women specifically, or taking at least their concerns into account, there's a number of issues that women themselves, poor women, have raised that would really help them. They've noted that some insurers do not provide coverage for pregnancy-related costs. And that's despite the fact that almost every day, 830 women die from preventable causes related to pregnancy. So that's a huge cost to governments, to society, to families. One of the key factors that can really make a difference is having access to skilled care before, during, and after childbirth. And if you've got microinsurance that covers your health costs and covers pregnancy, these services are more readily available, and you see a huge difference. The other concern that women have raised is that often microinsurance products are only available through microfinancial institutions. In other words, if you've got a loan, you have to have your credit life insurance, you have to have an insurance policy that covers the cost of your loan in case you default or can't, basically if something happens to you. And so it consists primarily of life and health insurance policies that are tied to your loan. Now, some poor women have said they would like to have access to these life and health insurance policies even after their loans are repaid. They've found them to be very, very helpful. They don't want it to be just tied to that loan. So here you've got a market saying, we exist, we would like to buy your product. So this, again, is potential for more business. And again, as Denis was saying, a way to make more profit, because these are more bodies. If you were talking about, like I said, a university, you call it bums in seats. I don't know what you call it in insurance. Premiums in the bank. They would also like to have the option of being able to pay a higher premium that would ensure that all of their family members can be covered. Because again, if you look at that as a risk factor for either falling back into or remaining in poverty, if your family member gets sick and you have to pay for that cost, you have to sell something, you've got to take somebody out of school, you don't recover from that if you're poor, not readily. So, and the kind of costs, for the Rwanda program, $5 a year, if that's possible, then this is a huge way to make a significant difference in terms of preventing more extreme poverty. As I think, again, as Denis said, I don't know that you're going to change poverty, but at least you can keep people from falling back further. And that's quite significant. Some women are also quite concerned that their spouses will not give priority to using life insurance payout to cover critical costs for their children. There might be different reasons for that, but the school fees in particular are a major concern. So they would like to have microinsurance products that include diverse payout options. So for example, the right to nominate someone other than their spouse as a beneficiary, which might not be a very popular decision, but they would need to maintain privacy. But it needs to be taken into account. How is decision-making done in the family? Often is very much based on gender relations and gender power relations. And the women might not have control over the money, but They would like to be able to control it after they die if they could. So in a way that will benefit their family, because they recognize that that power is just not there, or they know that there will be other demands on their spouses to spend the money elsewhere. Like the spouses are often under pressure as well. The other thing they would like is, some women would like, is they would prefer if the life and health insurances tied to loans could be voluntary as opposed to mandatory. Now, this is somewhat controversial. I understand that while there's some voluntary schemes have proven to be quite effective, there can be a higher loss, profit loss with the voluntary programs. So it has to be planned very, very well. It can be done, but it has to be thought through very, very carefully. But it has been done. The Sewa Bank for self-employed workers in India and Banco Sol in Bolivia have both had success with this kind of more voluntary approach. So what I'd like to do now is, okay, I've discussed some of the concerns that women have raised, and these are based on research done by the ILO Innovation Center. They have a really, really very good paper on microinsurance and gender. But some of the examples that they gave of organizations, companies, or firms that have been able to provide these kinds of flexible options include Colombia's La Equidad. They're a mainstream insurer for 3 million people. I think they're also, with that much insurance, they're probably a mainstream employer as well. But anyway, however, they've structured their microinsurance to provide benefits to children, exactly providing those extra options that the women wanted. They include both a lump sum payout for death and funeral support. So in other words, those immediate expenses that you have after somebody dies. But they also provide a monthly benefit that can only be used for education for 2 years following the death of a parent, and monthly payouts for food for 1 year. And that provides a kind of a transition to a new, okay, you've got less income coming in, maybe you have to cover off another relative to come in and provide care for the children, but there's those transitional costs associated with the death of a parent. So those are things that the women have found very, very useful, and so have the men, actually. Often I have found, and this has been my experience in gender in general, when you develop different kinds of actions and products that benefit women, often the men benefit from those as well. One example I like to use is the introduction of flex time at work. That's benefited both sexes, even though it was initially often brought in to help women address the fact that they often have more responsibility for children, but the men found it very useful. Anyway, as I said, I can go on with this stuff for some time. So another example is the Banco Sol in Bolivia. Now they offer a health microinsurance program in collaboration with Zurich Insurance. So here you've got a joint venture. And this provides full maternity coverage with just a 7-month waiting period. And that's really significant. Of course, you have to find out you're pregnant really fast. But some of us are in denial, but the first few months. But this allows women to buy their insurance shortly after they find out they're pregnant. And it has really made a significant difference. Now, Banco Sol was able to do this, even though they're a microfinance institution, but they were able to do this because they have close to 200,000 clients in Bolivia. So they were able to use this volume that they already had to negotiate more women-friendly terms with Zurich Insurance. And Zurich Insurance has come to understand that this is the benefit to both organizations. It was quite successful. They had a pilot for 2 years, and within 2 years, the program had 14,000 health microinsurance clients, of whom 62% were women. So this is a program that, as I said, benefited both men and women. But I used to work in Bolivia, and at the time I worked in Bolivia, albeit it was a few decades ago, Bolivia had the highest maternal mortality rate in South America. So this is a very significant program in terms of hopefully making some kind of dent in that maternal mortality rate. And with both institutions making a profit at the same time. So that to me is a win-win. Okay, finally, the Sewa Bank in India, they also provide diverse products that cover death, health, and women's assets. That includes options to cover husbands and children for low incremental fees. So they, again, responding to that requests to be able to pay a little bit more so that everybody's covered, not just themselves. And the children's insurance covers all children in the family, not just, you don't have to pick one child. So then you don't get into that horrible choice of, you pick the male child, the female child, the oldest, the youngest, which child do you pick? So it covers everybody. The other thing that SEWA has done that has been really effective is they've integrated their clients' fixed deposit savings accounts with their insurance. So clients have the option of using the interest from their savings accounts to pay for their insurance premiums. So for them, it's almost like they're not paying for them. If you discount inflation, depreciating your funds. But so that makes it relatively painless, if you, which is another way to look at it. To find ways to help poor people pay using the funds that they've got, because they do understand very quickly how insurance of this type is of a benefit to them. The other thing is that SEWA has recognized that men and women communicate differently often. And so they've used very diverse communication strategies to promote their microinsurance products. In India, you have a fairly high illiteracy rate amongst poor women. So they've had to come up with communication products that address literacy issues. That they're more graphic, is more one-on-one kind of discussion or interaction. And they have found that their female clients do value regular face-to-face interactions. Now that has implications in terms of your efficiency and your administrative costs. But if it gets you more clients in the door, if you get enough of clients, then you can do that one-on-one and it will pay for itself. So those are just a few examples of some successful programs. Denis and Nigel, Denis already described some, Nigel will tell you about some more, but there are a lot of options and a lot of ways to make this work. But what I really wanted to sort of to sum up was by really saying there is a very, very powerful case for developing microinsurance products that cater to poor women's specific needs. Now, if you look at your women's market, the Royal Bank of Canada about 25 years ago suddenly realized that there was a women's market out there in Canada for loans. And they went after that market. They cornered that market and they made a lot of money. And so they were known as the leader for that. You can do the same thing with microinsurance. You can not only corner the market, make a lot of money, present as a good corporate citizen, but also then make a really significant difference to these women's lives. So there's a huge potential market. You know, out of those 2 billion people, 70% are women, maybe a little bit less, but it's a lot. Your existing product and delivery models out there are proven and shown to be cost-effective and profitable. And on the flip side, there is a spin-off effect to families with regard to the social infrastructure and taxes. In other words, if the women's products means that the families are not falling back further into poverty, or their main costs are covered, the kids are still going to school, they're graduating, there's huge, all kinds of studies that show that the more years of education girls in particular have, your birth rates go down, your children are healthier, they have higher incomes. I mean, there's all these spin-off effects which will have far fewer costs to your government and your community. And the other thing is that it basically does, in that sense, can contribute to quite significantly to poverty reduction.
Thank you very much, Dana. Thank you for helping us understand some of the gender issues in microinsurance. Right now, I'm just going to take a look to see if we have any questions for you. All right, no questions so far, but again, as I said before, we will have a Q&A at the end of the session. Okay, now we will go to Nigel. Nigel is actually joining us from South Africa, and he's going to discuss more on microinsurance and overcoming some of the barriers. Welcome, Nigel.
Great, thank you very much, Laura. So as Laura said, I'm going to try and give an industry perspective to microinsurance and where the industry stands internationally, and dwell quite a bit on some of the barriers that are perceived to be in existence in microinsurance, and how they can be addressed. Can you maybe go to the next slide, please? So, yeah, like I said, I'm talking about microinsurance current state of play internationally, and in particular how microinsurance has grown, the barriers, how they can be overcome. I'm going to speak a little bit about what actuaries get wrong in microinsurance. Denis has mentioned something already. I'm going to build a little bit on that and finish off with a thought around the role that microinsurance plays in development and the potential for microinsurance. The next slide, please. So in terms of the definition of microinsurance, what is often put out as a common definition is the one by the Microinsurance Network, relating to insurance for low-income people against specific risks in return for premiums which are commensurate to that risk. And I think some of the critical parts of that is obviously the target market being low income, and that has some implications which I'm going to mention quite briefly shortly. But also the second thing to be quite clear on is that there need to be premiums paid. So microinsurance is not social security, and it's not there to replace social security. So we're not, the target market is certainly not the poorest of the poor. It's simply low income customers. And in terms of that target market, one of the key implications to bear in mind is that most of these customers have never ever bought insurance before. And that raises some key issues around trust, understanding of insurance, and understanding of financial services in general. The second point to note is that by its nature, it must be small ticket insurance. So that means that you need to tread quite a fine line to balance the customer value on one hand and being financially viable on the other hand. And a term that's often used alongside and interchangeably with microinsurance, some of you have probably heard of, is inclusive insurance. And I just wanted to dwell very briefly on how I view that to be different from microinsurance. So inclusive insurance, as per its name, is essentially for people who were previously excluded. Whereas microinsurance is typically, yeah, it's excluded people, but it's a specific segment of excluded people in the low income, and also typically tends to be concentrated in the developing world. So some of you may be familiar with Lemonade from the US, which is about a year old now. That would be very clearly an inclusive insurer, but probably not regarded as a microinsurer. 75% of the customers are actually first-time buyers of insurance. But being in the US, they tend to have high-income customers, and a lot of them tend to be young professional individuals. We move to the next slide, please. Please. Thank you. So in terms of microinsurance growth, we've seen pretty rapid growth internationally. First graph on the left gives an indication of the growth in the number of risks that were covered, ranging from 2007 up to 2013, which is an annual growth rate of approximately 22%. If you contrast that against your traditional insurance, where growth internationally has probably been less than 5%, you can see obviously microinsurance is really starting to grow quite rapidly. One of the main drivers of that are the partnerships that have, over the last, say, 5 years or so, maybe a bit longer, that have been formed with mobile operators, mobile telecommunications companies. And a reasonably recent study that was done by the Munich Re Foundation showed that in Asia, the number of lives covered with these mobile operator-led models increased from 5 million up to 26 million in 2013 and 2015. There's some really rapid growth happening in Asia, and similar growth is happening in other continents of developing markets. And to highlight the three areas that are driving this growth, the first is probably led by government subsidies and sometimes government compulsion. Some of your larger health insurance and agricultural schemes fall into that category. Early on in the development of microinsurance, compulsion is very important and results in very successful microinsurance schemes. This is seen very often with microfinance institutions where they compel their customers to add credit life insurance to their loans. And thirdly, probably the most interesting area, at least for me, and the area that Inclusive Solution plays in, is in partnerships with aggregators and in particular with mobile operators, where mobile operators do bring quite a number of the, or actually help solve quite a few of the barriers which are presented, which is what I'll talk about next. So I've identified 5 barriers or issues that I perceive to be barriers to further development of microinsurance. The first being trust. A very interesting survey that was done in South Africa, actually quite a number of years ago now, really illustrates the issue around trust quite well, where customers responded to the survey felt that your informal microlenders were more trusted than insurance brands. And that was in a market that is actually very developed in terms of insurance. And that really, to me, highlighted some of the challenges which insurance brands experience in microinsurance markets. It's just a significant lack of trust, largely due to very poor claims experiences. The second point in terms of financial literacy or education is, I guess, quite closely linked to the trust and also the fact that we're dealing with first-time buyers. These customers are often not in the formal financial services networks, they're not financially included, and therefore they do not always understand how insurance and other financial services work. One of the key questions that we often get from customers is asking, so if I don't claim this year, are you going to pay all my premiums back? Clearly not fully grasping how the pooling effect of insurance works. Affordability is also a very big issue, and this, like I say, it's really a balancing act of providing sufficient value to your customers and yet having sufficient margin to operate. And we need to know quite a bit around the efficiencies of microinsurance programs, which are really key. Distribution, another one of Denise's points. I agree with that it's one of the biggest issues to address. If your customers are not formally employed and are not within the formal economy, they quite often become fairly difficult to reach. That's something that needs to be addressed. And similarly, various payment channels are quite often difficult to find efficient payment channels when your customers are again part of the informal economy. Now I'm going to move on to how I see these various barriers can be addressed. First point around trust. One thing that has emerged over the last roughly 5 years or so is allowing customers to experience insurance at very little or no cost to themselves. So effectively offering it for free to customers is obviously a cost, and that's carried by someone else usually. But that gives customers a chance to experience insurance, see that it can work, provided claims are paid according to the reasonable expectations, which is the next point. when customers start experiencing a product, they start realizing and how it can benefit them. They start realizing that it is actually something that works, they can trust it, and they can maybe start committing some money towards it. I've already mentioned the claims expectation, absolutely crucial. That is where insurance needs to work for the customer. And if it doesn't work for the customer, if there is trust, you are going to destroy that trust. And the third point is that you can partner with brands that are extremely strong in the market. Because Denis was mentioning BRAC in Bangladesh, if I remember correctly. Similarly, your mobile operators also do tend to offer a very good brand that customers are willing to trust, not only for voice and data services, but even for insurance services. Second barrier on financial literacy and education, that's something which can only really be addressed by engaging the customers as much as possible in a very positive way, and using effective channels to do that. And one really interesting example of a company that is actually doing this at the moment is Juntos, I guess a fintech company based in Silicon Valley. They engage mobile financial services customers through an automated text chat system that they've developed based on simple artificial intelligence. The aim of what they do is to increase the participation of the customers, the usage of the customers by the customers of mobile financial services. That really is speaking to educating customers, and through that education, they begin using the service more. On the affordability side, obviously crucial to understand your customers' willingness and ability to pay for insurance. But from my experience, what customers say and what customers do when they're asked to part with their hard-earned cash are two different things. The only really way to test that adequately is by putting a product out in the market, seeing what the reaction is. Linked to that is that you need to be extremely efficient in pretty much everything that you do. So the smart use of technology throughout all your customer engagements is really crucial. And again, maybe an example of that would be Quintus in engaging customers digitally with simple text messages in order to educate them with the increased usage of those financial services. And applied in the insurance perspective, it should result in increased take-up of insurance and improved persistency. And by persistency, I simply mean stickiness, increased willingness to pay premiums regularly. On the distribution side, what is crucial there, in my view, is to find the right balance between what we would call high-touch and low-touch distribution models. So by high-touch, that is your face-to-face type of distribution, which by its very nature will tend to be relatively expensive, and therefore obviously needs to be balanced by affordability. Low touch would be more your electronic type of or digital type of interaction. That could, for example, be sending a text message to a customer or a potential customer, encourage them to sign up via a USSD menu, which is a simple menu which they can activate on any type of mobile phone, irrespective of whether it's a smartphone or a feature phone, dumb phone, whatever it's being called. And I think the key here is to start understanding which of your customers you can reach with low-touch models, and therefore at a very cost-effective way, and which of the customers need to be reached with higher touch models such as outbound call centers and even face-to-face. If you can get the mix right, probably through the use of data analytics, you can seriously improve your efficiencies on the distribution side. And on the payment side, the key here is to find the right partnerships. And again, the background I come from, our view is that mobile operators are able to provide a very good channel in either mobile money or potentially even airtime, but there are enough always drawbacks. We find that mobile money usage is fairly limited amongst customers, and if customers are active, they seldom have cash available in their mobile money wallets to pay premiums. That is where one needs to become a bit more innovative and tailor your payment mechanisms, payment frequencies to the way your customers behave. One of the keys that underlie essentially the solutions to, I think, all of these 5 barriers, that your products need to be extremely, extremely simple. We do take a very low-touch distribution approach. So in other words, dominantly digital, and our test of whether a product is simple enough, whether we can succinctly explain the key benefits to our customer within key text messages. So that effectively gives us 500 characters within which to explain our product. And if we cannot do that, then our product would be considered to be too complex. Next slide, please. So moving to the actuarial side of things and what actuaries tend to get wrong, I think the key message here is that very often actuaries don't really understand the context within which microinsurance happens. And this is both from the customer perspective as well as the product provider perspective, that is the insurer or the type of provider. From the customer perspective, an actuary really needs to understand the types of risks faced by the customers, which can be very different from the types of risk that an actuary would be familiar with. In particular, the impact of those risks can be very different. So particularly if an actuary is coming from a developed market, quite often they have a very, very limited understanding of what the microinsurance market actually looks like. Even some of actually in developing markets, who tend to be much higher income individuals, don't always understand the reality on the ground of your low income population. They also need to understand the financial realities around what the impact of even minor shock events that give rise to some expense, what that can be, and also the realities around uncertainty of income and how variable that income can be. So products need to be designed accordingly. And from the product provider side, a lot of actuaries are used to working in an environment where the provider is well established, has good processes, has good governance. And quite often, this is not the case for microinsurance providers. And as I mentioned, these issues are exacerbated when actuaries are coming from a developed insurance market and starting to work in a microinsurance market. What quite often happens is that your actuaries would try and apply their knowledge and experience from the traditional market, now take into account the nuances of the microinsurance market. And they'll quite often take a more technical approach to a product, a particular problem, than a more pragmatic and business-orientated approach. I think a very nice example of that was something which I experienced a number of years ago, working for an insurance company in Namibia, where we're doing what is called a direct mailing campaign. So they partnered with a bank. They would send out personalized offers to selected individual customers of that bank, and the offer would be limited for a specific number of weeks. The customer needed to respond within, say, 1 month. And And through that, they would limit the risk of anti-selection, whereby potential customers can sit and wait until they're ill before they take the policy, or someone who is already ill, who is not a customer, a selected customer, can potentially apply for the insurance. And after about 3 months of the scheme running, we realized that the mortality rate was in the order of 7 to 10 times what we as actuaries had expected and what we had priced for. Needless to say, the insurance company was making tremendous losses. And the typical reaction of an actuary is that, oops, we got the pricing wrong. We need to increase our price quite dramatically. But before doing that, we decided to investigate a little bit deeper what was actually happening. And we found out that the insurance company had put application forms, blank application forms down in the banking halls, and word had effectively spread throughout the country that if you had a sick relative in hospital, go and take the form, have it filled out, return it, and they would be insured, and if they were to die, the funeral would be covered. So we stopped that practice, repriced only marginally, and returned to profitability in a fairly short period of time. And linked to the actuarial side, I just actually wanted to highlight a joint project which the International Actuarial Association is doing in conjunction with the International Association of Insurance Supervisors, and essentially looking at what should actuaries be doing in the microinsurance space. So we're really trying to answer the questions of when are actuarial skills required, what are those skills, and what level of expertise should actuaries bring. And just the work that we have been doing, which Denise also been very closely involved in, actually says it depends very much on the level of risk. The riskier a product and provider environment is, the greater the need for more skilled actuaries. And on the other side of the spectrum, if it's really low risk, we can get away with not even requiring an actuary to be involved. Simply needs someone who understands the technical side of the business. They do not need formal actuarial training. And the project's, I guess, really trying to begin addressing the issue of the lack of actuarial skills in a lot of the markets where microinsurance is taking place. Because quite clearly, the actuarial profession is very concentrated in your developed markets. Slide, please. So in terms of a conclusion, I trust is the next slide. I cannot actually see it in front of me, but it's really just a story which I came across from the Kenya Financial Diaries, which to me summarized very, very well in this particular example what the developmental impact of microinsurance can be. So Isaac's wife in Kenya was diagnosed with an illness that required approximately $230 for treatment. She was unable to raise that amount of cash for the treatment and subsequently passed away. Immediately after she passed away, that same social network raised $330 for a funeral. They were unable to raise that for health. So my point is, there are a lot of existing informal insurance structures out there, but they are certainly not adequate. I think an example like this perfectly proves that. And it's exactly these type of circumstances which insurance is designed, where your customer has a shock experience and that then pushes them back into poverty, as per that diagram that Denise shared. So I really believe that there is huge potential for impact through microinsurance. There has been substantial growth. I think there are still some barriers that need to be overcome. I think the industry as a whole is making pretty good progress in overcoming those barriers, essentially as we speak. Thank you very much.
Thank you, Nigel. So now we will go to our Q&A session of the webinar. I'm just going to look, see if we have any questions. Okay. So I have one question here for Denis. In the example given by Denis on Rwanda, are they doing any health insurance, and what is the ideal number of insured clients needed to make it profitable, sustainable?
Okay. In Rwanda, they were in fact only doing health insurance in that village. So the context of that village is the average income of the family was actually $50 a year, and they're paying $5 for insurance. So they're paying actually a substantial amount, much higher than what we usually see. So Nigel talked about an ability to pay and willingness to pay. We usually see that around 2% of income of the family for insurance. So that was an exceptional case. In terms of what size you need to make it sustainable, it depends on the product and the organizational skills of the organization. If you're doing credit life, probably if you have 10,000 clients, it should be sustainable. It could be sustainable. If you're doing health insurance, if you're doing only hospital cash, probably about the same size. If you're doing agricultural insurance, that's also a very different situation in agricultural insurance, because there you have a risk that's systematic throughout the whole region. So you also have to be big enough that you can buy reinsurance, because it's a very different game. So I don't know really what the right size is for that to work, but usually around 10,000 people, if it's a well-managed organization, can work for a lot of the insurance types we're working with probably the exception of agricultural insurance. And also the 10,000 from an actuarial point of view, it gives you enough spread of risk, if it's well done, that it should be sustainable or can be sustainable.
Thank you, Denis. We also have another question. I'm just trying to get up to this one. From Richard. It was Richard's question. Okay. It seems that we only have one question so far. We also have attendees here with us. Is there any questions that anyone here would like to ask our speakers?
You do have one other question in your question box that came from Philip.
Oh, Philip? Now I'm not seeing it, Cindy.
Okay, I'll read the question out. This was addressed to any panel member. A few mentions made about actuaries not being well enough aware of the microinsurance context about drivers of development initiatives not necessarily being attuned to the measures and risks associated with setting up microinsurance schemes. It seems there would be lots to be gained from a closer association between those working in development and those working in insurance. Are there, we're just about the question, are there some nexus points out there already? And what could we do about this to encourage this in Canada?
Well, maybe I'll start. There has been some efforts. The ILO has put out a publication and trying to help actuaries understand in pricing. There are different organizations like the Frankfurt School that has put a course out on helping people understanding how to price this product. And then there's a project that Nigel was talking about doing the IAA and IAIS. In Canada, there's no activity that I'm aware of on this issue, because this is not even on the radar of anybody in Canada. In the development world, when I came from the insurance industry into microinsurance, started working with SEWA, I mean, the development world speaks a totally different language in the insurance world. So it's a little bit of a bridge to cross for everybody to start understanding each other, what they mean by certain things. And it is a lot of work to get everybody. But the development world was totally different view of how things should work and how they can actually work in the real world. But the insurance companies also put in a lot of barriers that are not necessary too. So there has to be a better dialogue between both parties.
We've also had a question come in from Colin. This is for either Nigel or Denis. Do you have any additional examples of private companies working in partnerships with development NGOs effectively?
Nigel, I don't know if you have. I see a few companies like AXA, Allianz. They've done some. Allianz has done actually an interesting project in Indonesia. But I'm not sure if they worked with developing partners. I think in the agricultural side there are a lot of development projects. I'm aware of one right now with a Quebec organization that's working in Mali with Allianz in Mali to try to bring an agricultural insurance product.
Yeah, from my perspective, I think it's largely concentrated in the agri space and potentially also mostly in the health space as well. No specific examples come to mind where the large insurers have partnered with development agencies very successfully. So yeah, unfortunately, nothing comes to mind.
Nigel, while you're on the line, Ken also had a question directed to you. He said, first was appreciation for your constructive presentation. In your experience, how do we get more actuaries to become involved in microinsurance?
That is a very difficult question, which I get asked fairly regularly, and it does tend to be quite a difficult environment to actually find opportunities in, besides potentially through sort of a volunteer type of short-term volunteer type of work. But I do think we need to be quite careful in how we do that, because as both myself and Denis have said, the risk there is that the actuaries bring their developed market mentality without considering the nuances of microinsurance, as I was saying. So we need to manage it quite carefully. Possibly Denis has a few thoughts on that as well.
Yeah, I think it's interesting to get more actuaries involved, but maybe some training to understand the better context of what they're doing would be helpful. Otherwise, I mean, when I started in microinsurance, I really didn't know what I was doing. I was working with SEWA, and fortunately, I kept on coming back there and saw some of the mistakes I made in advising. So I sort of self-learned this, and then now there's a bigger community with Nigel and many other actuaries involved that have a good knowledge base. So there maybe should be some courses developed to help people understand the context of what they're doing, and that might improve the actuarial involvement. And we also don't want to get from a regulatory point of view, actuaries in Kenya, they put in, I saw a draft legislation where they required an actuarial report for microinsurance product when there's no data. And actuaries complain about working with no data. And that's possible to do if you have a better understanding of the context and can bring cross-country experiences in. So there's a lot of work to be done to get actuaries involved in this.
If I could maybe just add to that, in terms of that joint project between the International Actuarial Association and the Supervisory Association, we essentially laying the groundwork now to determine when actuarial skills are required and what skills are required. Clearly, the next step is then to begin developing that capacity. So it is certainly very high up on the agenda in terms of what needs to be done. I think it's at this stage, it's simply an open question as to how it should be done.
Question. Dana has spoken very strongly about the need for tailoring the microinsurance products to meet the needs of women and children. And I'm very curious, Denis and Nigel, as to whether or not you've actually seen those and seen them working, or what is the success rate when you start tailoring them to that level?
Yeah, in Nigeria, there was a microfinance organization that when I was in that country, we visited, and they started off with a credit life, just paying the debt when the debtor dies. And the loss ratio was 40%, and they went back to the insurance company and saying, we want to bring additional benefits to our member. And they actually brought in maternity coverage and postnatal and antenatal coverage as a benefit to their members. I thought that was a fantastic way of saying, we have the people are paying a certain premium, let's bring, they're hearing from their client base saying these, and they also see, they know their clients, they see what's happening. They said, here's something we can bring. And there's also a project I haven't been involved with, maybe Nigel knows more about. World's Women Banking has created a project and to develop specific products that are more sensitive for the needs of women and their families. So.
Yeah, I think that the world's Women's World Bank's a good example. That unfortunately I don't know any more detail besides that they are doing specifically have an insurance function with people looking at insurance specifically for their customer needs. But from my employer's perspective, inclusivity, women is the women segment is an area that we are very interested in. Unfortunately, we're still pretty new and finding our feet, so we haven't yet got that far, but we do see it as a very attractive market segment, specifically for some of those points that Diana was raising around women effectively being more responsible and therefore better customers to have. So the same experience as came through on microfinance institutions, we would expect the same type of loyalty to come through on insurance as well. And from that perspective, it can have a very big positive impact on essentially profitability.
And maybe one other point I'd like to add, what Dana was mentioning, when you have family members insured, especially for health insurance, for example, in India, RSBY, they're programmed to reach people. They make people pick there's a maximum of 4 people covered under the family policy. And in those instances, what we see is they pick the male child versus the female children. And so I would advocate against, putting limits. And when you look at the distribution of number of people in the families, adding the tail end of the family and covering everybody is not that expensive. It might add 10% to the cost. So I would really discourage limiting families and making people pick.
Okay, I think that's all that we have for questions. Do we have any other questions or discussion items?
Just one follow-up question for Nigel and Denis. From wearing your other hat, which is the Canadian Institute of Actuaries, and your IA hats, what are you all doing in terms of reaching out to the international development community, if anything? So your group's in
the Canadian Institute of Actuaries probably is not, I mean, there's a few Canadian actuaries, actually. The most actuaries involved in microinsurance besides South Africa are all from Regina, Saskatchewan. So the Canadian Institute of Actuaries has had very little involvement in this area. And Nigel is part of the IAA, this dialogue. I'm part of that group also. We're not really reaching out to the development community, but in the microinsurance network, I'm also a member of that. I'm a board member of the microinsurance network, and they have. I mean, there's a dialogue between actuaries and development partners in that space and insurance companies. So it's an interesting space to try to get dialogue going. And I've seen tremendous progress since we started. There's still a lot of work to do.
Yeah, I think just one other relationship from the IAA side is with the ILO's impact insurance facility, which we got a pretty good relationship with, largely through the actuaries that are employed there. But besides the microinsurance network, as Denis mentioned, and I guess regular presenting at the microinsurance conference, the main annual conference, Munich Re Microinsurance Network, we are not actively involved in building those relationships with the development community.
Okay, thank you so much. Is there anything else from our speakers that we'd like to bring up before we close?
I'm fine, thank you.
Well, thank you, everyone. We appreciate you joining us here. Thank you to our speakers for giving such wonderful presentations on microinsurance. And that's a wrap. Okay, thank you.